Hi, everyone. Welcome to Real Estate on the Front Range, my podcast where I cover all things real estate. This is Sean Gilliam, your host. And as a local real estate agent here in Northern Colorado, I want to keep you apprised of how the market's trending so that you can be well informed before you make your next move. This is the start of season 2, and I think no better way to kick it off than to give you my market forecast for 2023. In putting this together, I use data from national sources as well as an annual report put out by Leeds School of Business at our local University of Colorado here in Boulder. They do a thorough evaluation of our local and national economies to give us an idea of what opportunities and or headwinds lie ahead. So I'll integrate this information with other sources of data to help us see how the housing market might look in the year ahead. So stay tuned. Hi, everyone. Welcome to Real Estate on the Front Range, my podcast where I cover all things real estate here on the Front Range in Northern Colorado. Join me to get market updates, tips, and information on relevant topics to make sure you're fully informed before you buy or sell your next home. This is Sean Gilliam, your host, and I look forward to you joining me on Spotify, Google, Apple, or whatever your favorite podcast is for the latest episodes. All right, welcome back. Well, here we are in 2023 with a long, volatile year behind us. In real estate, we saw a remarkably intense first half of the year with homes selling well over list price with multiple offers, and that was due to the high competition from buyers. As well, we also had lower mortgage interest rates. The latter half of the year tells a different story, though. Those low interest rates shot up over 5%, then 6%, and even 7%. Homes suddenly were sitting on the market for several weeks before going under contract, and sellers started to do price reductions, something we hadn't seen since before the pandemic. Some sellers are reducing the list price of their home as much as some were being sold over list price just a few months before. The market changed almost overnight, though it has tapered off some toward the end of 2022, especially with mortgage interest rates leveling out in about the 6% range. With all this drastic change in the housing market in 2022, what lies ahead for us in 2023? Well, let's start at the beginning of the market shift, as that will help us to better understand the variables at play. In the late spring of 2022, inflation was continually on the rise. Generally, there is a direct relationship between inflation and mortgage interest rates. With the cost of goods and services getting more expensive due to inflation, mortgage interest rates made a marked increase. From mid-March to late April, rates went from 3% to over 5%. After a significant increase in home values for the last 2 years, this sharp increase in mortgage interest rates made it very difficult for many to afford a home. As rates continued to rise and the uncertainty of our economy was on everyone's mind, buyer demand sharply decreased. The aforementioned consequences of this continued throughout the rest of the year and now into 2023. However, as inflation has eased in the last quarter of 2022, so have mortgage interest rates. Looking forward, everything hinges on inflation and whether or not we have a recession, or are having one already, as some say. A recession is when the economy shrinks 2 quarters in a row, measured by a decrease in gross domestic product, which is defined as the market value of all the goods and services produced within the country. As inflation has eased in the last half of 2022 and appears to be moving in the right direction, albeit slowly, some forecasters predict we might not even have a recession. If inflation continues to decrease, mortgage interest rates will also go down. The more mortgage rates go down, the more buyer demand will increase, and then the housing market will start to move forward again, though not likely at the pace it has in the last 2 years. While this sounds like it should be a smooth process moving forward, if the economy goes into a recession, things could go in a different direction. It could lead to increased unemployment, which in turn could potentially cause an increase in foreclosures. This could lead to depreciation in home values and hurt homeowners' equity, especially those that bought a home recently. But those are the what-ifs regarding the general variables involved. What do the experts think at the national level with regard to mortgage rates, home values, and whether or not we'll have a recession? I follow a few experts in the field, so I'll review what they think is going to happen. Let's start with home values. I took a look at 7 different national organizations that have their home price appreciation forecast for 2023. And it's split down the middle, with half of them thinking home values will go up and the other half will think they will go down. Now, starting with this, Realtor.com has an optimistic outlook. They think that home values will appreciate by 5.4% for 2023. Pulseonomics believes there'll be about 2.6% home price appreciation. The National Association of Realtors sees a 1.2% appreciation. And the Mortgage Bankers Association sees about a 0.7% appreciation in home values. On the flip side of that, though, Freddie Mac sees about a negative 0.2% depreciation in home values. Fannie Mae sees a negative 1.5% depreciation, and Zelman sees a negative 5.1% depreciation in home values. So, like I said, the slight majority expects to see continued increase in home values, while organizations like Freddie Mac, Fannie Mae, and Zelman all expect to see a decrease in home values. The averages of all 7 forecasts is 0.4% positive appreciation, so that's good. Looking at another expert, David Childers with Keeping Current Matters predicts a flatter market, but there will still be appreciation. Lawrence Yun, the chief economist for the National Association of Realtors, also predicts a flat market with an overall median price appreciation of 1%. While no one is expecting a significant increase in home values, one expert believes we might see a 15 to 20% decline or depreciation in home values on a national level. His name is Patrick Bet-David. He's the Chief Executive Officer of PHP Agency. And in an interview with he and Tom Ferry and David Childers, he believes that the housing market, among other financial markets, will see significant declines in 2023. Whether or not we'll see decreases or increases will in part depend on which direction mortgage interest rates will move, which in turn depends on what happens with inflation. Similar to home values, forecasters have diverging opinions as to how rates will move in 2023. Most forecasters, including Freddie Mac, Fannie Mae, and the National Association of Realtors, predict rates will range from 6.10% to 7% throughout 2023. The Mortgage Bankers Association has a more optimistic outlook for rates, expecting them to drop to 5.2% by the fourth quarter. An even better outlook is predicted by Barry Habib with MBS Highway. He predicts that the inflation number will go lower, and as a result, mortgage interest rates will go lower, possibly below 5%. I hope this is true, as it will help make homes more affordable for many and will help homeowners maintain and build their equity. Now I want to focus on the local economy and the housing market for Northern Colorado. As I mentioned, I'm going to reference data from the Leeds School of Business at University of Colorado. They put out their Colorado Business Economic Outlook and Forum, and then I'll also include some local housing market data as well. Colorado's economy is expected to have above average growth in gross domestic product, wages, and employment. We're expected to see wage increases in all business sectors except the arts and recreation sector. Employment growth was 4.4% in Colorado for 2022. Now, in 2021, they projected 2.7% growth for 2022 and said that if it hit that mark, employment would be at pre-pandemic numbers. So we surpassed that, which puts Colorado in a strong position. The forecast in employment growth for 2023 is 2%. Interesting note is that Wallet Hub rated Colorado as the 4th best state to find a job. Economically, what does all this mean for the state of Colorado? In my opinion, if the country goes into a recession, it won't likely have as much of an impact on us as it would on states that are less well equipped as we are. Population growth is expected to reach 55,000 people in 2023. Growth is expected to come from net migration, or the number of people moving in minus the number of people moving out, of about 35,000, and natural increase, which is the birth rate minus the death rate, of about 20,500 people. To help give insight into why people move to and from Colorado, United Van Lines, a major mover, put out their 2022 United Van Lines Mover Study. The results indicated that the main reason people left Colorado are for family, a new job, or retirement. The main reasons people move to Colorado are a new job, family, and lifestyle. Because of the steady population growth, demand for houses will technically remain strong, albeit dormant, while mortgage interest rates remain higher. With these factors in mind, the Leeds School of Business has several predictions for the residential real estate market in Colorado. Home values will likely be flat with limited growth and possibly a 3 to 5% depreciation in the worst-case scenario. Secondly, rental rates will likely remain constant and possibly even higher as demand for renting properties remains strong. Thirdly, we will likely return to the typical seasonal real estate market with a more active spring market, though it'll be nothing like we saw in the last couple of years. And fourthly, homes that are updated and priced correctly will likely sell quickly. Those that do not have what buyers demand, such as updated kitchens and bathrooms, will likely sit on the market longer and have to reduce their list price in order to sell it. In summary, Colorado is in a stronger position than other states economically. This will bode well for us when the economy improves, and while home prices went dramatically higher in the last couple of years, higher mortgage interest rates ended that trend quickly. This has brought relief to buyers, though higher rates still makes purchasing a home more difficult and even impossible still for many. On the national level, if inflation can continue to be reined in, as it seems to be in the last 6 months, that consumer price index, that's the key inflation metric, has been going down or edging down consistently for 6 months in a row at the end of December. If that continues, we'll see mortgage interest rates further come down. This will bring buyer demand back, and paired with ongoing low inventory, will put upward pressure on home values, though not as intense as it was in recent years. Conversely, if inflation continues to be a problem and we then experience a recession, buyer demand will continue to remain lower and home values will likely experience a decline, as some of the experts predict. I hope this is helpful. If you have any questions about the data or how this data might impact you personally as to whether or not you should buy or sell a home, don't hesitate to get in touch. You can reach me here at 970-313-6706. And then also in the podcast link, I'm going to put a link to the blog post itself. That's where there are hyperlinks to all the references I use for this data. So if you have any questions, again, don't hesitate to get in touch, and I look forward to talking to you soon. Take care.